Ladies and gentlemen, good day, and welcome to the Q1 FY26 Earnings Conference Call of Carborundum Universal Limited, hosted by Equirus Securities. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Patel from Equirus Securities. Thank you, and over to you, sir.
Hello, good afternoon, everyone. On the behalf of Equirus Securities, I welcome you all to the first quarter FY26 earnings conference call of Carborundum Universal. We have with us from the management, Mr. Sridharan Rangarajan, Managing Director, Mr. Sushil Bendale, Chief Financial Officer, and Mr. G. Chandramouli, Advisor. I would like to hand over to Mr. Sridharan Rangarajan, Managing Director, for the opening remarks, and post that we will open the floor for Q&A. Over to you, sir.
Good afternoon. I'm Chandramouli. As a practice, let me read out the disclaimer before getting into the call. Good afternoon. During the call, we may make certain statements which reflect our outlook for the future or which could be construed as forward-looking statements. These statements are based on management's current expectation and are associated with uncertainties and risk are more fully detailed in our annual report, which may cause the actual result to differ. Hence, these statements must be reviewed in conjunction with the risk that the company faces. Thank you.
Thank you, sir. So, good afternoon to all of you and a warm welcome to our first quarter earnings call. I will give an overview and then we will open up for question and answers. To start with, consolidated sales for the quarter was 1,207 crores, in comparison to 1,184 crores Q1 FY25, which is a 1.9% growth compared to the same period last year, and 0.6% compared to Q4 FY25 of rupees 1,199 crores. Standalone sales was 698 crores compared to 664 crores in Q1 FY25. This represents a growth of 5.2%, and in comparison to Q4 FY25, that represents a growth of 1.7%. In Q1 FY26, consolidated PAT declined by 45.2% compared to Q1 FY25. That is from 113 crores in Q1 FY25 to 62 crores in Q1 FY26. This is due to the lower volumes in VAW, which we have explained in the last call itself, and RHODIUS and domestic businesses. I will explain all of this in detail a little later. In Q1 FY26, standalone PAT of rupees 145 crores grew by 55.4% from 93 crores in Q1 FY25. The increase is due to a one-time dividend from SETCO, which is about 68 crores. Now I'll cover the consolidated performance. As stated earlier, the consolidated sales for the quarter was 1,207 crores, with a growth of 1.9% compared to Q1 FY25, and compared to Q4 FY25, it is a 0.6% growth. Softer growth at consolidated level was mainly on account of RHODIUS. RHODIUS as such is making a change in their logistics partner, which caused a substantial drop in volume. I will cover that in the RHODIUS section separately. And the drop in volumes at VAW, which we have earlier explained in our Q4 last year's call itself. And they are actually trading as per the business plan, and they are fine as at a lower level. Of course, they are at lower level, but they are trading as per the business plan. You would note that the ceramic segment grew by 11.1% and electrominerals by 6.3%, while abrasives declined by 8%. Consolidated PAT for the quarter was 62 crores. This, in comparison to Q1 FY25 PAT of 113 crores, is lower by 51 crores. The lower profit is due to higher losses in VAW in comparison to the last year's Q1. And if you would recall that in January 2024, we had the sanction, and that is what, we had this challenges coming forth. This, coupled with drop in profit in Rhodius and the standalone businesses, put together accounts for this difference. Roughly, you can say 18 crores broadly. Consolidated PAT for the quarter at 62 crores in comparison to Q4 FY25 PAT of 29 crores, grew by 33 crores. This is predominantly due to the reversal of deferred tax asset at Avuco in Q4 25. If you remember that we had reversed the deferred tax asset that what we claimed so far in Q4 FY25. Standalone business in Q1 FY26, standalone sales was rupees 698 crores, which is a growth of 5.2% compared to rupees 664 crores Q1 FY25. This was contributed by growth in electrominerals at 12.3% and ceramics at 10%, and standalone abrasive business grew by 5.5%. Standalone profit after tax for the quarter was 145 crores as against 93 crores in Q1 FY25. This is higher by rupees 52 crores. Compared to 61 crores in Q4 FY25, PAT of Q1 FY26 is higher by 84 crores. I think both this is due to the one-off dividend of rupees 68 crores from SEDCO. Now I will cover the segmental performance. To start with, in abrasives, consolidated abrasive sales in Q1 FY26 was 508 crores. This, in comparison to Q1 FY25, sales of rupees 552 crores has declined by 44 crores. There is an 8% decline. Rhodius abrasives declined by rupees 26 crores and standalone declined by 70. Together is this fall. Consolidated sales in Q1 FY26 at rupees 508 crores in comparison to 538 crores in Q4 FY25 showed a decline of 30.5 crores. This is mainly coming from Rhodius abrasives. At standalone abrasives, sales for Q1 FY26 was 286 crores. The last year Q1 FY25 sales was 303 crores, resulting in a decline of 17 crores, which is 5.5%. Precision segment grew well. We are seeing softer demand in the channels due to the inventory correction. And as far as Rhodius is concerned, Rhodius recorded a net sales of 13.2 million euro in this quarter compared to 17.3 million during the Q1 FY25, which is a 23% decline in sales. Rhodius has shifted its logistics partner in Q1 FY26 for better efficiency. This resulted in a significant disruption of operation. This resulted in non-fulfillment of orders on hand, resulting in lower sales. We expect the stability of operation to come by end of August. We expect this would impact the full year sales as well. We expect the remaining 3 quarters sales would be in line with the last year's sales. Rhodius incurred a loss after tax of 1.6 million euro in this quarter against the PAT of 0.3 million in Q1 FY25. This was mainly due to the loss of sales arising out of the logistics issues. AWUKO achieved the sales of 2.6 million euro this quarter in comparison to 3 million in Q1 FY25. The loss before tax are at the same level as that of Q1 FY25. Now I'll cover the PBIT performance of the abrasive business segment. Consolidated abrasive PBIT was rupees 11 crores. In Q1 FY25, it was 55 crores, and in Q4 FY25, it was 34 crores. The drop of 44 crores in Q1 FY26 compared to Q1 FY25 is due to Rhodius amounting to rupees 26 crores, entirely due to loss of sales. Standalone drop of about 16 crores. Consolidated PBIT of Q1 FY26 was lower by 22 crores in comparison to PBIT of 34 crores in Q4 FY25. This is mainly due to Rhodius abrasives and standalone abrasives. I will move to the next segment now. Electrominerals. Consolidated sales in Q1 FY26 was 405 crores, showing a growth of 6.3% compared to Q1 FY25 of 381 crores. Standalone business showed a good growth of 12.3% compared to Q1 FY25. The performance of VAW was lower due to the sanctions imposed in Q4 FY25. However, consolidated sales in Q1 FY26 was at 405 crores, was higher by 30 crores when compared to 375 crores of Q4 FY25. This is mainly due to better performance in standalone, slightly better performance in VAW, etc. Standalone electromineral sales for Q1 FY26 was 212 crores with a growth of 12.3% compared to Q1 FY25 of rupees 189 crores. Standalone sales in Q1 FY26 at 212 crores was higher by 7 crores when compared to rupees 206 crores in Q4 FY25. This was on account of increase in volume as well as price. Standalone electrominerals saw good growth from export as well as domestic. VAW sales for Q1 FY26 was ruble 1.84 billion, which is a 25% decline from ruble 2.46 billion in Q1 FY25. Sales for Q1 FY26 was ruble 1.84 billion, which is flat compared to ruble 1.83 billion in Q4 FY25. In Q1 FY26, in ruble terms, the profit after tax was ruble 72 million as compared to 287 million in Q1 FY25 and 110 million in Q4 FY25. FSRL sales for Q1 FY26 was 56 crores compared to which is a 3.7% increase as compared to Q1 FY25 of 54 crores and 6 crores higher than 50 crores in Q4 FY25. In Q1 FY26, FSRL incurred a loss before tax of rupees 8 crores as compared to 5 crores in Q1 FY25 and 7 crores in FY25. Now I'll cover the PBIT of electromineral segment. Consolidated EMD PBIT for Q1 FY26 was 4 crores. In Q1 FY25, the PBIT was 43 crores. The drop of 39 crores in Q1 FY26 compared to Q1 FY25 is due to VAW amounting to rupees 27 crores, standalone business amounting to rupees 9 crores, and Foskor amounting to 3 crores. Consolidated PBIT of rupees 4.4 crores in Q1 FY26 was lower by 2.6 crores in comparison to PBIT of 9 crores in Q4 FY25. Ceramics consolidated sales in Q1 FY26 was 300 crores, showing a growth of 11.1% compared to Q1 FY25 of rupees 270 crores. Standalone business showed good growth of 10% compared to Q1 FY25. Consolidated sales in Q1 FY26 at 300 crores was higher by 3 crores compared to 270 crores in Q4 FY25. Standalone ceramics sales for Q1 FY26 was at 238 crores with a growth of 10% compared to Q1 FY25 of rupees 217 crores. It was higher by 9 crores when compared to 229 crores sales in Q4 FY25. This was on account of increase in volume, price. In industrial ceramic business, metallized ceramics, engineered ceramics drove the growth, and refractories, monolithic, and corrosion resistance business grew as well. Now, turning to the PBIT performance of ceramic segment. Consolidated ceramic PBIT for Q1 FY26 was 75 crores with a growth of 16%, as compared to 65 crores of Q1 FY25. Compared to 74 crores in Q4 FY25, the PBIT grew by 1.5%. Standalone ceramic PBIT for Q1 FY26 was 62 crores with a growth of 25.4% compared to 49 crores of Q1 FY25. In comparison to Q4 FY25 of 55 crores, the PBIT grew by 13%. Now I request Sushil to cover the PBIT margin, debt positions, capex, cash flow, and the ROCE.
Thank you. The PBIT margin for the consolidated was at 6.7% for the quarter compared to 8% in Q4 FY25 and 12.6% in Q1 of FY25. Standalone, for the quarter, standalone PBIT margin was at 23.8% compared to 11.8% in Q4 of FY25 and 18% in Q1 FY25. This also includes the one-off dividend income from SEDCO. Now, abrasives for the quarter, consolidated abrasives margin declined from 10% in Q1 of FY25 to 2.2% in Q1 FY26 due to a drop in volumes at Rhodius and the standalone business. Standalone margins dropped from 17.6% to 13.1%. The drop in margin was mainly due to drop in volume and increase of freight and fixed costs. The consolidated margins declined by 398 basis points compared to Q4 of FY25. Standalone margins declined from 16.2% in Q4 of FY25 to 13.1% in Q1 of FY26. Electrominerals. For the quarter, consolidated electrominerals margins declined from 11.4% in Q1 of FY25 to 1.1% in Q1 of FY26. The decline was mainly attributable to the lower volumes in VAW coupled with lower realization. Standalone margins dropped from 8.5% to 3.3%. This is mainly due to higher input costs. The consolidated margins declined by 132 basis points compared to Q4 of FY25. Standalone margins improved from 2.8% in Q4 of FY25 to 3.3% in Q1 of FY26. Now, ceramics. For the quarter, consolidated ceramics margins improved from 24% in Q1 of FY25 to 25% in Q1 FY26. The standalone margins improved from 22.7% to 25.9%. The consolidated margins increased by 10 basis points compared to Q4 of FY25. Standalone margins improved from 23.9% in Q4 of FY25 to 25.9% in Q1 FY26. Now I'll talk about the debt position. There was no debt in our standalone books, and total debt at the consolidated basis was at 172 crores at the end of Q1 FY26 compared to 120 crores at the end of Q4 FY25 and 112 crores at the end of Q1 FY25. The debt to equity ratio was at 0.05 at the consolidated level. In Q1 FY26, our capex investment was 64 crores against 63 crores in Q1 FY25 at a consolidated level. Free cash flows in Q1 of FY26 at a consolidated level 98% to PAT compared to 37% in Q1 of FY25. At a standalone basis in Q1 FY26, free cash flow to PAT was 104% compared to 47% in Q1 of FY25. Now for ROCE, for Q1 of FY26, the ROCE at a consolidated level is 8.1% compared to 16.9% during Q1 of FY25, and at a standalone level, it was at 24.6% compared to 20% in Q1 of FY25. For consolidated segments, ROCE in Q1 FY26 for abrasives decreased from 15.5% in Q1 of FY25 to 2.8% this quarter. Ceramics has decreased from 41.5% to 37.8%, and electrominerals has decreased from 17.8% to 1.8%. For our standalone businesses, ROCE in Q1 of FY26 for abrasives has decreased from 45.4% to 26.3% this quarter, and ceramics has improved from 44.5% to 47.2%, and electrominerals has decreased from 22.3% to 8.4%. Now the unallocable expenses net of income. At the standalone level, unallocable expenses in Q1 of FY26 was an income of rupees 60 crore. If you exclude one-time dividend from Serco of 68 crores, this would be an expense of rupees 7.3 crores. In Q1 of FY25, the unallocable income was 72 lakhs, and the difference is due to lower dividend in few companies in Q1 FY26. In Q4 of FY25, the unallocable expense was rupees 26 crores due to seasonality in dividend receipts. Now I request Mr. Sridharan to take you through the next section related to the future outlook.
Thank you. So just to summarize, I think ceramic sales, we communicated a sales growth of 16 to 18% last time, the full year level at consolidated, and we hold our guidance for the consolidated ceramic segment. EMT sales, we gave a guidance of 1% to 2% growth in electromineral division last call. We retained the same guidance. Abrasive sales, in our last call, we communicated 5% to 6% for the year. This could be about 4% to 5%, considering the lower sales in Rhodius in Q1 FY26. So overall, last time we said 6% to 7%. We are now looking at 5.5% to 6.5%. Consolidated margin in the ceramic section, last call we communicated PBT margin of 23.5 to 23.7. On a full year basis, we maintain the same. EMD, in the last call we said 6.5 to 7.5% on a full year basis. we currently look at 4.5 to 5.5%. The braces, last time we said the PBIT margin could be 8 to 8.5% on a full year basis. Currently, we are looking at 6 to 6.5%. We said that last time the overall consolidated PBIT margin could be a drop of 100 to 150 basis points compared to a 525 base of 11.2. Now we are looking at 250 to 300 basis point drop compared to that level. So just to summarize, I think Rhodius the transfer of logistics issue is quite an unexpected one, and we did not consider in our forecast. There is a complete chaos in terms of software breakdown, physical movement of goods were impacted. So now we are trying to address this. We expect end of August all this will be addressed. We expect that rest of the quarters the sales will be in line with the last year. In EMD standalone, the margins drop is due to higher alumina costs, which I think is now passed on because the inventory, whatever we had, was completely liquidated. They are back to normal, and that should get us back to the proper margin that what we were gaining. Besides these two, I think the major challenge was the abrasives local India drop, which we feel that we will get back from Q2 onwards. So with that, I would, of course, you have seen that our free cash flow is in good shape. We have delivered 100+% in standalone. A very healthy free cash flow in consolidated. Balance sheet is quite strong. We have done all our programs as far as the long-term strategy is concerned. We are tracking very well. So those are in good shape. We will address these one-off blips that we will, come back strongly in the coming quarters. Thank you.
Thank you very much. We will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Bhavin Datlani from SBI Fund Management. Please go ahead.
Good afternoon, sir.
Good afternoon, Bhavin.
Sir, 3 questions. So first is on VAW. So could you help us understand the way forward, given that now we almost have 6 months since the sanctions? What is your thought process in mitigating, and how do we get back to normal levels, and when, in your view?
Okay. You said 3 questions, or I answer one by one?
Okay, I'll outline. Second is, in the domestic abrasive segments, if you could give us a bit more color on where are we seeing slowdown, given that we have 3 segments that you outlined. One is the retail, another is industrial, and third is the precision. Where exactly is the impact? Optically, it looks the precision is hit, and hence the margins have got lowered. So more color here will be helpful. Third is, if you could just help us understand on the German subsidiaries, what is the one-off that was there in the quarter? How do you see these 2, Rhodius and Woco, on the balance 9-month period and on the full year basis, excluding this? What should be the revenue and profitability in the balance 9 months period? These are my 3 questions, sir.
Right. Thank you. So as far as VAW is concerned, I think we broadly guided last time that, we expect the volumes should be lower 25 to 30%. In the last call we have guided that. This time also they are lower by about 25% compared to the same period last year. We are restricted to selling only inside Russia. We are continuing to do that. They are profitable within that set of the business. But the future depends on how, the settlement as far as Russia, Ukraine is concerned will turn out. And based on that, developments will happen. I don't want to hazard a guess, given that, multiple forces are at play. As far as abrasive segment is concerned, you're right, there are three broad segments. We have precision, we have industrial, and we also have retail. The challenge that currently we are facing is on the retail side. And as I was telling that, there is a reasonable growth in the rest of the segment, which is what, making us confident about it. This is quite a few major distributors have to focus on their stock clearance, and that is what, cost us this decline in sales. As far as the German subsidiary Rhodius is concerned, as I told that this quarter we had lost about 4 million euro compared to the same period last year. We expect that the similar, the remaining 3 quarters, we will be in line with the last year's sales. What we have lost, we will not be able to recover. Meaning this order we will serve, that is the thing, but since there's a significant delay has happened, we expect that we will not be able to recover. But of course, we are trying our best to see how do we serve this order as well as be able to serve the future orders. The issue is largely in terms of the change of software caused a significant delay, which is one major reason. So the pick and pack, we were not able to perform. We could not physically move the inventory from the previous warehouse to the new warehouse. Even in the new warehouse, we were not able to have a proper location. These are outsourced warehouses. So this caused quite a bit of a challenge. It's getting addressed. We expect end of this month we will completely address this issue.
Sure. So just one more question.
Sure.
Bookkeeping question. Employee expenses for the consolidated is up by 24, and if I look the subsidiary piece, which is minus the standalone, they are up by a little over 30%. So if you could just help us understand here.
So I will get back to you with the answer to you. One, can we move on to the other question? In the meantime, we will try to find the answer.
Sure. Thank you so much for taking the question.
Thank you. Thank you.
Thank you. The next question is from the line of Ravi Swaminathan from Avendus Spark. Please go ahead.
Hi, sir. Thanks for taking my question. My first question is with respect to the standalone electrometal business. The margins are kind of still on the compressed side. You had mentioned that it was because of raw material prices going up and now we are passing it on. But earlier you had mentioned that there was also competition from Chinese players, especially in alumina, etc. What is the status with respect to the competition from Chinese players in this particular category? That is my first question. And with respect to the second one, in terms of the other option value kind of products like high purity silicon carbide and supply of ceramics to emerging product categories like EVs, etc., what is the status of that?
Okay. So thank you, Mr. Ravi Swaminathan. So first of all, as far as the electromineral is concerned, the alumina price literally went up in the 6 months. It doubled. It went up as high as about $800, and then it fell down to $350 per ton. And the inventories that we and the fall is in the matter of 3 to 4 months. So the inventory that we held because we bought this at a higher price have to be liquidated, and that is what is causing us this problem that we have in Q1. The price pressure continues to be there. We don't see this as anything new, but that is continuing aspect. As far as the high purity silicon carbide program, it is progressing well on track, and we are progressing on some of this qualification process. We are progressing on track. As I guided, it won't be a major sales for this year, and we are not looking at an immediate short-term type of a revenue arising from that.
And with respect to ceramic sales for EVs and semiconductor industry, is that a big driver of growth, likely to be a big driver of growth over the next 1-2 years or 3 years?
Right. So you are right. I think that's the good driver of the growth, and that is also one of the reasons why we have a very good growth in ceramic segment at this point in time.
Okay. And within ceramics and refractories, one last question. With respect to wear ceramics, the technical ceramics, metallized cylinder, and refractories, how, if you can break up the growth, how it was in the overall 10% growth that we have seen this quarter, which is growing faster, which is seeing better traction. If you can give even a kind of a broad commentary or color on it, that would be great.
Yeah, I think we are seeing our engineered ceramics business, metallized ceramics business are growing well. We are also seeing monolithic business growing well, quite decent, and we are also seeing our corrosion resistance business doing well. There are few softness in terms of wherever projects are getting executed. That is where there are some delays in that. That is why some of the expected projects there is some delay. Otherwise, the business overall are doing well.
Project would be which end user industries, sir?
We typically serve many industries: carbon black, cement, steel, refractory products goes into many industries, so that happens to diversified industries.
Understood, sir. Thank you.
Right. Thank you, Ravish.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So firstly, on the US tariffs, what could be the impact on our abrasives and ceramics exports? Because we export quite substantial amount to the North America in this. Could there be a substantial impact on our supplies to that clean energy customer in the US, from where we have started seeing some pickup from CY25 onwards?
Yeah, sure. Thank you, Harshit. We see this, so far it is evolving. I won't call it we have any conclusive answers on this. And as you would know that the world itself is just grappling with this. We do not know what is the final outcome going to be. So, but what I can see is that broadly, it is a function of few things which I want to lay out here is, are there equivalents available getting manufactured in US? Are there equivalents available from other countries? And how fast the process of qualification is going to take place, and also suitability for the manufacturer to adopt to a new supplier, and a function of what is the differential duty versus what we can absorb, and the ability of the three parties to share this difference, whether it is the customer or the intermediary manufacturer in US and the supplier from India. So these are the parties who are going to deal with this. Plus, of course, there are other factors like what the Indian government is going to provide as support, all that factors. So I would say at this stage we do not have any immediate threat or any issues that we foresee. We have made reasonable examination of all these factors that I laid out. But I would like to get to a full picture to understand what exactly would be the impact in all this. We seem to be in a decent position.
Understood. So my second question is on the CapEx. What are our CapEx plans for the next 2 years, FY26 as well as FY27, across all three of our major segments? I think you have highlighted doing some CapEx for fused alumina-based products in electrominerals, supplying to the semiconductor OEM equipment from ceramics, doing bulletproof armor as well as vehicle armor related products. So if you could highlight all the areas and quantum across all three major segments, that will be very helpful.
Yeah, I said we don't normally provide that kind of a guidance. I think if I remember, it is about 350 crores was the capex program that we guided last call, that we would spend for this year. So that we are sticking to the same one, and all the programs are in line with that.
Understood, sir. Thank you very much for answering my questions, and all the very best.
Right. Thank you, sir.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good afternoon, and thanks for the opportunity. So only one question I have. So on the stand on abrasive, is the industry not growing? Is it the demand or competition? And any color on that will be helpful.
See, I would say industry is growing. I don't think there is a decline in industry. Definitely there is a growth in industry. Of course, you have the other published player. You are very much aware about that. What is the kind of results that we are getting in that? More or less comparable. There are minor variations here and there. I feel the industry is growing, and as I have laid out in the last call also, we feel that there are segments where today products getting imported and coming into India is growing substantially high. So definitely overall growth in the abrasive sector is growing. We have a specific challenge of our major distributors, or particularly stock clearance and their own, credit locks, those mechanisms. But other than that, I won't say that the challenge is industry-led.
Understood. Thank you, Mr. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask question. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good afternoon, sir. So my first question is on war. It's been a tough quarter. You spoke about the 25-30% kind of decline. But if I look at the revenue numbers, console minus standalone, it seems to be fairly stable. Can you explain why we're seeing the revenues being stable? And if you can call out the war loss during the quarter.
Sorry, what was the last part of the question?
The loss at war, sir, at Russia?
Yeah. So I think your question is that console minus standalone is stable, is what your observation, if I understood you correctly.
Right? Yes, in EMD.
Right. So I think that's you are very good in your observation, because I think we source product from VAW and then use that product which got stopped. So what happened, the elimination of, so we actually show the sales outside only to the customer. That is what is the total sales that we do. So since that has stopped, hence the elimination has come down. You see a flat number. That is what you have observed, which is the right observation. But per se, the sales of VAW has come down, which is in line with what we have gated. The second question you asked is the margin on the EMD, right?
Yes.
So, EMD losses, just hold on. Sorry, you continue your question. I will gather and come back. Sorry.
Okay, sir. I mean, just if you can just get back to the, what is the quarterly revenue and profit at war, that would help. Second is in terms of...
We shared that. Just give me a second.
Sure, sir. So in the meanwhile, we were looking to commission an HPSIC plant later this year.
Sorry, a second. VAW sales was 1.84 billion in Q1 FY26 compared to 2.46 billion in same period last year, Q1 FY26. So that was the number that we shared. Yeah, in ruble terms, the profit after tax was 72 million as compared to 287 million, and 110 million in Q4 FY25. These are the numbers we read. Yeah. Please go ahead, Bhumika.
Hello?
Participant left the queue.
Okay.
A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Bhumika Nayak from DAM Capital. Please go ahead.
Yes, sir. You can hear me?
Yeah, we can hear you. I don't know where we got dropped, but I was just telling the numbers. You were able to get it, or?
Yes, I got it. I got that, sir. I got that.
Okay. Thank you.
My question was on HPSIC.
Yes.
We had this pilot plant to be operational at the end of the calendar year. What is the status of that, and how are we seeing the progress in terms of the client offtake and things like that?
We are very much on target as far as the HPSIC pilot plant is concerned. As I told in the previous question also, our samples that we are working with various clients have been seeded. They are in the process of testing, very much on target. And I just want to repeat the same thing I told in the earlier answer. We do not expect any huge sales arising from HPSIC business in this year or in the near-term future.
Okay, sir. So the next question is on the Rhodius, segment, part of the business which you called. There were some logistics-related challenges which impacted the ability to kind of drive revenues, and we expect that, from September onwards, it will kind of normalize. Now, if I take a step back, it's been about 4 years since you've taken over Rhodius. If you can just help us understand what has been the benefit, how are we seeing the profitability and the revenues kind of grow out there. There is a PPA impact, which I do understand, but how do we see the turnaround at the console level for the international subsidiaries for abrasives? If you can just explain a little bit out there.
Sure. Thank you. So I just want to lay out here is that since the time we acquired, without PPA, we have been making continuous profit, right?
Sure.
And this year, with this exception of the 4 million loss, we expect a loss, right? So that is what, and we expect that the remainder of the 3 quarters, we will be same as last year in terms of the top line, but we will not be able to recover this lost volume. Hence, we will have a loss for this year. We expect that, last year we had without PPA, we were profit in the last 3 years, that whatever we have been operating. And this year we could be in the range of about roughly about 2 million euro type of a loss.
Sure, sir. And how is the demand outlook, and how are you seeing this kind of improve into FY 27-28? If you can just talk about that.
I do not have a crystal ball that gives all these answers.
Sure, sir. This helps. I'll come back to the question.
Very tough to predict that.
I understand. I was just trying to understand, how is the demand in general panning out? What are you hearing on ground? That is where I was coming from.
So I mean, it's same as what every one of us here is. I think we need to wait for some more stability to emerge in terms of this multiple things that floating around. So we'll wait for some more sense to prevail.
Sure. And lastly, if I may ask, what is our overall U.S. exposure? While we understand that it is difficult to gauge what will be the actual outcome, and it might not be much.
On console sales, roughly about 8 to 10% of our sales is US based.
Okay. Fair point, sir. This helps a lot. Thank you so much and all the best.
Thank you.
The next question is from the line of Aditya from Kotak Securities. Please go ahead.
Thank you for the opportunity. The first question that I had was on the abrasive segment, not focusing on where the market is and where the competition is, but CUMI as a company had thought through certain steps that they would want to take to improve their competitive positioning on the retail side of things and outside. Could you give us a sense of the progress that has been made over there, and when should we start expecting benefits coming out of the same for us?
So we have rolled out the programs in terms of our abrasives growth. We are seeing the benefit of it, and we are working towards each of these dimensions that we said we will work. As I said, that this quarter is an issue relating to some of these inventory corrections in the dealer side of it. But otherwise, our ability to cover newer states, which we are so far our market share is low, is definitely progressing well. We've started right earners there. NPD programs are firing well, so that is also well on track. In some of this go-to-market work in terms of our agility, ability to work and getting better productivity, that is also on track well. So we think that the programs are on track. It is on the ground. We are seeing the efforts type of our, these are like, for example, the number of calls that each one makes, the number of productive calls each one makes, the coverages that each one makes, all that tracking, whatever we are seeing, are progressing well, and probably we will start seeing the results soon.
Okay. Is there a need to do a similar kind of maybe benchmarking study or reassess our competitive positioning on the standalone electromineral side? Wherein obviously there is a element of Chinese competition, but do you envisage any amount of work that needs to be done to get that segment back on track from a competitive positioning perspective?
So honestly, our competitive position in terms of the India EMD position is really reasonable. That is why we have in the LTS program, how do we go beyond the aluminas and what are all the programs which we have laid out in the last call is positioned towards that. And we are very much on track and we are progressing towards that.
Okay. The last question I had was more on Bronco, which is essentially assets that you want to recommission inside the country. My sense is about 250 crores is something that can be achieved as incremental sales in the abrasives business. What could be the timeline of the same, and how could we see the contribution scaling up to these kinds of revenue levels from that asset?
Sorry, I'm not aware that I needed that kind of a sale, but the program of Dranco research, this one is very much on. We are, on the ground. The equipments have come. They are in the process of assembling it. So those program is very much on and in time for execution. It's as per program. Whatever we said we will do, we are going ahead with that.
Could you clarify what is the capacity or the revenue number at full capacity that can come from that kind of acquisition and obviously the start of the facility?
So it is not an acquisition, it is an asset purchase where it is roughly about 80 million to 100 million worth of wheels we will be able to manufacture. That is our capacity.
And the sales number that can come from there would be, you're saying 80 to 100 million.
We have not told anything like that at this point. As soon as it commissions at that time, we will start sharing that.
Thank you so much. Those are my questions.
Thank you. As that was the last question for the day, I now hand the conference over to the management for the closing comments. Over to you, sir.
So, thank you all for your participation. I just want to reiterate the facts that to me is well on track as far as the strategy that it wants to implement, whatever we have laid out in the last call. Every program is being pursued right on us. We have a specific challenge in terms of ODS, which completely was unexpected. A warehouse move impacted us in a huge way, about roughly 4 million euros. The inventory, high-cost inventory that EMD was holding is getting liquidated. In fact, it's completely done, so that margin pressure that what we have seen in EMD would go away. We see that the sales pressure that we have seen in abrasive, particularly on some of the distributor sales, due to stock clearance, we could not push that. We would be able to get back. So on the whole, I would say that we are very much on track, and progressing in terms of our long-term strategy well. Our balance sheet is quite strong. Cash flows are really good. The focus on free cash flow is really good at this point. So we will continue to update you as we meet in the next quarter. Thank you.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.